Yesterday, the US benchmark stock indexes drifted down, though staying not far away from historic highs. The US Central Bank is facing a dilemma. On the one hand, the US economy is almost back on track at the pre-pandemic levels of February 2020. Unemployment is still 1.52% above the pre-crisis rate, but this comes as no surprise. Employment always lags behind other fundamental metrics. It seems that the time is ripe for the US Fed at least to halt cash injections of $120 billion per month in the market and shift to more neutral monetary policy. And on the other hand, the regulator is aware that policy changes could trigger a large correction in the stock market, subdue investments, and cut household spending. This could bring economic growth to a halt. Thus, the Federal Reserve will try to delay the turning point in monetary policy until as late as possible. However, such a procrastination bears a risk of overheating the market and blowing bubbles. This could entail a new crisis. Investors will find out a policy update of the US Fed later today that will hardly spring surprises. Experts are certain that the regulator will maintain interest rates at 0.25% as well as its QE program. US stock indexes are trading mixed. Earlier, the Dow Jones crept away from the record highs. Today, it shed 0.4%. Meanwhile, Wall Street is focused on the Fed's policy decisions. Ahead of the Fed's announcements, the US dollar is trading higher for 3 days in a row amid rising yields of US Treasuries. Today, the US dollar index stands at 91.90. The USD CAD pair is trading at near 1.2460. Experts reckon the Canadian dollar could weaken sharply to 1.2550 in the nearest time. The reason is Canada's CPI released today. Consumer inflation slowed down to 0.3% in February from 0.5% in January. This is bearish for the loonie. In the first half of the day, Bitcoin was trading at $54,500 to $56,000 per token. No serious changes happened in 24 hours. Perhaps those investors who did not take profit and highs last week are looking in profits now. So the bears are putting pressure on the market. Analysts warn that traders should worry about a pullback to $45,000, the lowest mark of the previous correction. This level could wreck the ongoing uptrend. Any correction above this level could be worked out by the bulls. Notably, trajectory may change anytime following an important event. For example, 2 days ago, India published a draft bill banning cryptocurrencies and mining. Such news always puts pressure on market quotes to make sure you have your finger on the pulse of the crypto-related news. The market sentiment is shaped by both positive and negative factors. Yesterday, the US released downbeat economic data. Retail sales slumped 5% in February. Industrial production also dropped 2.2% on months. Europe has to deal with a new coronavirus outbreak. Germany downgraded the economic outlook for 2021 to 3.1% against the 3.7% in the previous forecast. Investors cheer the news that the pandemic in the United States is ebbing away. The number of new cases stays firmly at below 60,000 per day, that is 4 or 5 times lower than the highest level in January and February. Biden's administration is pushing ahead with a mass vaccination. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you later.